It's the weekly 30-30 trading list on the ASX. We're reviewing the 30 best momentum companies over the last quarter and the ones that have had the best improvement in momentum over the last week. We call those companies the Launchpad. Gary Glover has selected his favourite charts for the week to pull apart, dissect, describe, tell us how to trade. He's also pulled out a few of his favourite own trades, and we're lucky enough this week he's going to go in detail due to some viewers' request about the B wave and how to trade that, well, what it is and how to trade it. So we've got a bit to unpack today, Gary. How are you?
Yeah, no, it's actually going to be some interesting stuff to cover today. So going to cover, a few questions regarding the B wave, sort of, where I look to enter trade. So I thought we might cover that in detail. I'll look at some, might sound funny that I'll look at a trade there that I was looking at pretty closely, and I'll discuss how I was planning to trade it, and then I'll go actually maybe in some detail how I actually did trade it. So sometimes it doesn't always go to plan. But let's get into the quarterly momentum there. So number one here is Wildcat Resources, not a bad name. WC8 had a bit of a pop here, hasn't really given too much of a pause here. Last thing on the chart, there's a big hanging man there, Chris, actually, sort of that a decent volume there, so that would probably have me a little hesitant on that one. But number two, what have we got? Number two on the list is WA1. This is really this is the holy grail, really, what we're looking for. So in terms of that, the VCP, so first leg down, bit of a bounce there. Second leg down here, bit of a bounce, and then that nice tight congestion there, no volume, and then you start moving here, and then you start to see the volume sort of fire up here. We saw, this thing here, you just never know how far these things are going to run, Chris. That's the thing. Sort of as we're sort of seeing with these core, these stocks hit the launch pad early, and we don't know if they're going to kick on or not, become the momentum. But what we do know is that before they hit the quarterly momentum, before they're sort of, kind of strong leaders for the quarter, they always start in the launch pad first. So they always hit the launch pad, and then they grow into there. And you just don't know how far these things can run. But the key things there is, we look at just price action alone, and the volume. So price has gone up on big volume, pulled back on lighter volume. We saw 4 days up here, good volume. We had 2 days down here, Chris, no volume. We've gone, rallied again, on reasonable volume. We've pulled back here, that second day, there's still no volume coming in, still no one wanting to sell this thing. So I think we've spoke about this stock the last couple of weeks, because it's been in the quarterly momentum for a few weeks now. But again, we just saw pretty strong volume again, and then we saw 2 days of no selling here again, and it's just gone again. So until you see some selling here coming in, this is why the trends, the trend's your friend. You just don't know how far these things can move. So when you trade these VCPs and they jump here, you don't know. So I mean, maybe you got your risk reward. Maybe you want to see it go to a new high, and that's enough for you. You might have risked, $2,000 to make $6,000. That's your rules. That's fine. That's all great. But with these sort of VCPs, and when these high momentum stocks here, once they move, you really just don't know how large they can move sometimes. So I've been sort of reading a lot of trend trading stuff here in the last couple of weeks there, and just and they just sort of trade. They just sort of go with the trend, and they just sort of stay with it until something gets broken, basically.
Like the CTAs, right?
Yeah, so just sort of they'll basically sort of like a moving average crossover might have them in, and then moving average crossover might have them out. It's just, and all they're doing is just sort of going with the trends here. But just sometimes these sort of moves here, there's no right or wrong way to trade these. It's just you can, but the one thing we're sort of seeing here week after week, having done this report for a few years here, is that those quarterly momentum stocks, some of them can just run and run and run. I mean, just look at that NEU as well, as that's on the list as well. I think that's sort of kept going here. yeah, that's had an incredible run. It's still sort of congesting there. I think was it TLX is on the list as well. I mean, that's just continued to stay firm here and keep running as well. So you just don't know when they break out here. You don't know how large these moves can be sometimes. So yeah, so look, you could set up a program to maybe try and catch these ones if you want, and then try and stay with them until they break a moving average or something like that. Sort of, it's not really my style, but if you wanted to sort of set those, try and catch those bigger moves and try and stay with it there, definitely can create a strategy around that. So, but it's just interesting that, price action wise, once they break out of here, if the price action is pretty firm, the volume's firm, and then you're seeing pullbacks on very light volume, it remains pretty constructive there. There's no reason to be sort of looking to sell here. So I usually like to sort of see some sort of elevated volume there. I know sort of one yesterday that really did pop was Megaport. Did sort of come out of this consolidation, sort of one that I was sort of personally trading here. But when I see a big pop out of the range like that on a bit of volume there, sometimes that can be, they can be a little exhaustive, those sort of pops sometimes. Not all the time, but yeah, I know sort of Minervini would probably trade some of that into that move. So I did trade some of my position out there into that sort of move, just because I sort of, even though it broke out there, just looked a little exhaustive there. But
that's selling into strength, right?
Yeah. But I mean, it's hard there because I sort of look at the weekly and think, wow, this has had good volume down here. Yeah, it's had a little consolidation, and this could pop up here. There's no reason why this can't go back to $8 here. So, but yeah, I guess in this market here, it's a bit choppy there. You want to take a little bit off into sort of those big moves. Maybe you hope it has a little retreat, little consolidation, you can get set again. But yeah, whichever way you trade there, you just got to be consistent there. That's the thing there. So if you want to try and catch all the big moves, then you've got to have a strategy to sort of stay in there and then only get out once it crosses over. If you've sort of got more your risk management rules where you're sort of risking sort of 3 to 1 or 4 to 1, wherever it is, and then you'll you usually stop and then 4 times the target, wherever it is, or 3 or 4 times the target, then that's fine as well. That just a numbers game, you just keep creating that. So there's no sort of there's no one method to actually trading here, Chris. But yeah, I think this the top traders there have they're consistent with their method. So it'll depend on what you're trying to capture there. If you really want to be the guy who captures that big moves and then stay with it, then you got to create a strategy around that. If you're happy just to take your 3 or 4 times a trade there, then you got to create a strategy around that as well. So really got to sort of create it around you. ENR was sort of one on list number 5 there, Counter Resources here. I thought this was pretty interesting just because this has had a fairly decent run there. Some decent volume sort of come in a bit late here, but still pretty robust, and pulling back here on some pretty light volume so far. So I thought, okay, this is interesting here, just because we're sort of, so far this pullback is on pretty light volume. So just want to see this hold here and maybe congest a little bit more, but nothing wrong with that. I mean, that looks like a big move, but apart from that one day, which we often see, I talk about the 1 day of selling is normal, and then if it dries up after that, that's actually pretty constructive.
This is looking a bit like a iron tight flag.
Yeah, so it's just that's sort of something I would definitely watch, just because the volume is just not coming in there. So that's definitely sort of one we should be writing down, as I just did then. But we should just be keeping close eye on that sort of stuff there. So I thought EOS was pretty interesting here. This is just had a little bit of a pop with some okay volume there, sort of broken some old highs as well, sort of broken out of this range. It's pretty constructive. So it's sort of starting to see a bit of a change in character. Did pull back in here. The whole thing sort of tightened up in here. For me, I talk about this little B wave is when we see a bit of a consolidation there, I'm just looking to sort of see it break above previous little swing high. That's kind of my little, it's like your sort of A, B, C. So Elliott wave tape, they basically say that every correction should be, the most common correction is like a little 3-wave pullback. like a little ABC. It usually goes to a new low there. You just see classic 3-wave pullbacks, most regularly. But I view this as my B wave here. So whether it comes back to a new low or not, that's the sort of key level there. So 79.5. So for me, breaking above 79.5 would be a positive sign there.
And that happens what on that large green candle day? It breaks the B wave with volume.
Yeah, and there's a way of sort of looking at that as well. I mean, yeah, maybe I'll just cut to the chase there and look at ABC, which is sort of something that I had in my weekly report this week, and we just sort of saw here the whole thing just tightened up here, Chris. So we're sort of like a little VCP in here. So this whole thing there is just really tightened up in here. So for me, basically, this is our, we sort of pulled back the first leg. This is our second leg, and then we've sort of really tightened up in it. And you can see the volume through this whole period there is flattened up here. So our VCP is tightened up here. So breaking above a swing high, which I think was 163.5, was what I was looking for here. So so really sort of, what the plan would be, for me, my plan was to buy 10% of this on a break of 163.5. So basically, my initial plan was basically, to put in an order, buy ABC if it hits 164, and buy it up to a limit of say 166, 167. So always give yourself a couple of cents grace there, because operators sometimes, depending on liquidity, depth, how much you're trying to buy, you might need to pay an extra cent or two. It's not worth trying to muck around too much there, but that was my plan. And if I'd got fulfilled on my plan, I wasn't expecting this to move 20%. I thought, if it moved like 5 or 10% would have been a nice initial move. But if you get 10% of your portfolio set and you get a 20% move, that's 2% move on your net portfolio for a single day. So to get a net move of 2% on your whole portfolio, that's pretty decent there. So that's why I do sort of trade concentrated. And I will go over 10% at times, but at the moment I'm probably sort of just a little bit lower just because of a more choppier environment. But that was the plan here. What did actually happen was that the stock actually had an announcement, basically, sort of. So I didn't want to sort of just have a blind order, and now I wanted to have a look and read that announcement. So I was obviously reading the update at the same time as everyone else, and by the time I got to the last line, which I thought was reasonably good, I thought, okay, this is safe to be bought. I tried to hit the offer, and there must have been 5 of us who read the same article at the same speed and all tried to hit the offer all at the same time, and we all probably got a quarter of what we were trying to get set on, and the whole thing just moved, and it literally went from like 163.5 to like 170 in a matter of 30-40 seconds. And I thought, no, I'm going to chase. I'll edge it up a little bit, and then I'll try and get filled, and just never really came back. I get popped again, and then came back a little bit, and it ran. Then I think it got to like 177, and I only had a quarter filled or something. I thought, that's had a big move. I'll just get rid of it, because I was annoyed I didn't get set properly, and I've already got too many positions. I didn't want to hold the position, so I just I killed the position, took a little gain, and moved on. But I should have traded this a lot larger. I should have stayed with it. There was nothing wrong with it. But yeah, so sometimes the best laid plans, something can kind of come out of left field and throw you. So look, I took a small gain for the day, but I really messed this up. So I really end up making a really small gain, considering I was watching this like a hawk. I wrote about it. It was just probably sometimes these news articles, can come out and they throw you a little bit. So there's talk about Darryl Guppy sort of sitting in a room, not avoiding the news, just trading the charts. The chart was telling us just to buy it. So, but I guess that's lesson learned sometimes. But yeah, sometimes just being mechanical is the way to go.
That's a good breakdown of a trade, unfortunately. but it's a good example of, well, planning the trade, trading the plan, and then the things that can happen left of field that you don't really plan for, like a news announcement that ends up driving the share price up 20%.
Yeah. People probably don't really probably don't understand actually why this is such a good trade here, because this whole thing is tightened up here. So if we're sort of drilling into this sort of stock here, just say I drill into my half hourly there, then this thing's it's really tightened up here. So when this is all sort of sitting in here, we don't want to see this break below here. So really, we might have had a stop here at 155 or something, or maybe we're even tighter. Maybe we were sort of sitting around here, which was like 157, 158 or something like that. So if we're buying it at 163.5 or 164, and we've got to say stop at 157 or maybe 156 or something there, we're only risking 4 or 5 cents. So we're not risking much at all. So therefore, you can actually trade with a bit of size as long as your stop's in place there, because your risk is so low. And then if it pops here, you get a big move here. So this thing's sort of, you're risking, say, 5 or 6 cents, and this thing's just rallied 40 cents. So what's that? That's 8 times your risk. So
8 return on risk in a day.
Yeah.
The dream trade.
So it's taken 2 days maybe to get you, to go to a new high. Well, actually, it only took 1 day to go to a new high. So yeah, that's why looking for these sort of coils here, looking for this. This is a Paul Tudor Jones sort of. He looks for a 5-for-1. He really looks for that. Condensing sort of. Where you can basically get set with a. Because it's okay to lose. That's the thing. You got to get comfortable. So I was having a conversation with a client this morning. There's no ego in trading. You really, the best traders have got a higher percentage of losers. There's probably 60% losers to 40% winners. So you have to get used to being the losing side here of trades here. There's no making a lot of money here without basically having lots of losses. So you've got to get comfortable with being a loser, with losing, with having losses. However you want to describe it, you have to be comfortable there. What is paramount is actually keeping those losses tight and contained, and because when you look back at the end of each year, if you can look back through your trading history and you only see small losses for the year, generally you're going to have a pretty good year. If you see, in the past, if I could have stripped out my biggest loss of every year, it would have been before I really got disciplined. If I could have taken that biggest loss out of my portfolio every year, would have been substantial. My gains would have been so much bigger. So let sort of something slide against me, something move against me, or for whatever reason. So I sort of, when you start to analyze that, it's quite compelling there. I tell every trader to go through and look at their trading history, look at every trade, review their trades, go back and look at your P&L every year. Look at the worst trades of the year. Those are the greatest lessons that you can actually learn from. The key there is to have the losses small the entire year, have no big losses, then let it run. So that's why sort of these little tight setups are good setups there, just because the risk reward parameters are so high, and that's what we're really looking for. And that's kind of the, to me, that's the holy grail of trading there is having those sort of risk reward. And that's why I like the false breaks, because sort of if you buy them near the low, you put your stop near the low, and then, even though they might go lower, if they turn there, that's when you get a big move, and then your risk reward parameters are sensational. So MEI, Meteoric Resources, was on the list there last week. Might have been in the last 2 weeks actually, Chris. And again, so far, it's been pretty robust there. It's sort of had this little consolidation under this high here. But again, look at 2 days of no selling, and then we've gone straight back up again. So 1 day of selling here, but the second day, basically no selling. So this way, sometimes it's just sort of, just watching these things closely. The smaller ones are sort of harder to trade with sort of stops. I don't, this is probably the only times maybe I don't have stops. There's sort of the smaller ones. I might just give myself a bit more room there, but I'll probably watch them closer. But yeah. On this list there, saw something like this one was sort of DLI. I thought this was pretty interesting, Chris, just because it's sort of, big move here, big pullback there. And then this has been pretty impulsive here. And there's been pretty good volume sort of through here. So, this is sort of like, this is like a big sort of cup, so this is one that I just said, I've got to put this on my list there because this could set up a handle here and eventually push through. That handle might take a month or 2 or 3 months to set up here. But this is definitely one to be keeping an eye on here because that's had good gains here impulsively and good volumes. Much more better volumes than this whole other period here. Much more better volumes than the first leg up. So that shows there's something going on with this stock here. Maybe some big improvements being made here. So that's definitely
that's sort of a confluence in there, as you're saying. Cup and handle coming up to the previous highs. The rally from 30 cents north of 60 cents in a matter of sort of 6-7 weeks, greater than 100% rally.
Yeah.
That ticks sort of the Thomas Bukowski high and tight flag criteria. At the same time, you've just run through a fair few lithium names that have been top 10 momentum stocks on the ASX this week. So the lithium thematic is definitely running. We know Joe Biden and Anthony Albanese met, and there's a lot of talk about the Inflation Reduction Act and how that impacts Australian companies. So there's a fundamental story there. There's a thematic that's gaining momentum. There's a confluence of two charting patterns. And like the ones you've pointed out before, if that congestion sits up sort of maybe north of 55, 60 cents ideally, is that sort of the ideal congestion setup with low volume?
Yeah, but it could take a while, Chris. That's the thing. It's sort of like, I think this looks pretty robust here. It's the ideal setup so far, but we really need the second part of this to set up here. Might take a while here. I think I think Patriot PMT, which is on the list as well, something sort of similar as well. But yeah, I mean, look, this is sort of one that we did talk about there, little VCP and Breakout, but it's been pretty robust. But it's gone back up to near the high here, so just sort of one to sort of keep an eye on there. I've looked at a few of them there. I thought, and there were quite a few of the sort of lithium names and just a few of the metals there that have actually run there. Even 360 has had a pretty good run up to the old sort of high here. Pretty good volumes there. This is like a big sort of cup as well. So, we could get a bit of a handle here, which might take a month here to hold just, and then eventually go through there. I mean, trends take a long time to build and have a bit of a pause, and then they're not always going up there. There's going to be in a bit of a, that's what I mean. Sometimes these sort of strong stocks, people sort of tend to hang on. You'll actually get a period there where they'll, even the stronger stocks will have a bit of a pause in the trend. So, you just have to sort of be kind of prepared for that. I saw Xero's had a pretty big move too. It's sort of, it's sort of probably one that I probably wasn't patient enough there. It sort of got to, it's getting up to around the highs here. I just thought, the volumes are sort of probably a bit lighter through here. No signs of selling here. That might have been one of the few days of sort of any selling there. But yeah, the whole stocks are sort of, eventually wound up here and then popped out of the range here. So, but this is pretty robust overall. But look, everyone's got their sort of style. Now, just looking at, that's the quarterly momentum there now. So just looking at the launch pad there, so a few on there. So ADO was number one there. It was sort of hard to see. Basically, you sort of got a very small stock having a bit of a pop there, which was a bit hard there. AR3 is on the list there. I'm not sure why this one made the list there, but I thought it was pretty interesting actually. Anyway, so just because it had a pretty impulsive move up on some pretty decent volume all the way up there. Did see some volume on the way down here, so was a bit of selling there, but now the volumes are sort of starting to sort of ease off there. And it's sort of sometimes stocks will come back and fill those gaps, Chris. So this is probably not a tactic I use, but this is more of an observation: is that these sort of stocks will come back to where they gapped up previously, left a gap behind, might come back and actually fill those. So interesting, around 30 cents there. The stock might actually, I just thought that looked pretty interesting there. On the list there, the ABC, we obviously spoke of that move there, little VCP, and then the pop. I think SQ2. I was watching this. Again, this. I spoke at length there the last couple of weeks about these false breaks, Chris. How the stocks all coming back to their old lows. So was this 83.10? I think 83.10 was the low here. So basically, stocks are coming back, retesting their old lows. So what we went to 83.01, 83.05. So basically, it's come back, basically made a marginal new low, and then it's bounced from there. So it's just something which is just just keeps happening in this current marketplace. Sort of bit of a choppy market. Some stocks, some things are trending, some things aren't. But definitely seeing a lot of the stocks come back, retest the lows, go marginal new low, then pop here. So definitely a bit of a false break there. Notice Oncosil actually on the list there, sort of one that I've sort of been watching there. Just some volume starting to come in here. Look, I followed this stock for too long. Actually, this is sort of in terms of sort of some of my worst losses. This is probably the stock that's probably hurt me the most over a few years back. So I sort of trade it differently now, but yeah, this one's pretty interesting here. Just sort of kind of raised a lot of money at 1 cent. I think it's a pretty sticky register. I think everyone's taking a stock here. But yeah, it's just there's some reasonable volume sort of starting to come in here. There's a lot of shares there, so it's going to take a while to move the needle. But one that I don't mind, but it's it's with a lot of shares out there, we'll take a bit to move it there. It's a bit like some of the buy now pay later, just a lot of shares there. Virgin UK, we talked about basically markets going back and retesting lows. This is sort of just went to a slight new high the other day, so basically made a little false break there, and then it sort of sold off, and we're actually a reasonable volume there previous day. So that's a signal I don't like. Don't like sort of seeing them go back to new highs and then fail, which usually means I'll come back below this last little level. So that's one that I would not touch there, just on the same reason I look at buying false breaks. I avoid sort of false breaks to the high here. Thought this one was pretty interesting here, SVY there, just because of the volume. This is some elevated volumes on the way up last time. So two things there, like it's come back and retested the low. So gone made our false break again. So common theme of going back and retesting the lows. And look at the volumes sort of here, building here. So elevated volumes at the last low, volumes again here again. So a little too small for me personally, but I thought it was pretty interesting there. I think they're copper, gold, zinc, and silver. Obviously got a bit of a strike there. So it's just whether further drilling comes up a winner or not. But definitely in the right sector there. Mentioned EML. This is interesting here, Chris, because that's had a reasonably impulsive move up for this stock. Has gone to a new high, which I do like, and then it's just sort of tightened up here. So really sort of tight, So again, I would probably want to see a little break above here. It's probably one that I'll be not enthusiastic to trade, just sort of not just when I see a stocks that are that have had this much downside momentum, I just know it's going to be hard for that stock to really get traction and get going. So there's going to be so many losers, so many people who have bought this at much higher places will be selling along the way. It's just going to be hard for any gains to get going there.
And that coming into this time of year as well, that can trigger tax loss selling, can't it?
Yeah, that's right. Yeah, so that's definitely the case here. Yeah, so if you get a small cap here and it's sort of underwater, it might have a small little bounce here, but it'll probably get dragged into that June 30. There'll be a few stocks actually. It'll be pretty interesting to actually watch that list. Well, probably we'll be looking at the stronger stocks in June 30. but it'd be interesting to actually look at some of the weakest, some of the worst performers into that June 30 there, because we sort of know that the next couple of weeks there produces some pretty decent winners as all that tax selling sort of stops, and then a lot of those dogs, the dogs of 1 year can start barking the following year, as we know. So yeah.
Well, this is for the long-time listeners. They'll know that Gary's portfolio that he talks about on Tuesday comes back to the 1st of July. I think it's 2019, and it was that portfolio, that date was chosen because you'd done some tax loss selling and thought, I'm going to put a line in the sand, because you've been running portfolios for a very long time. But that was it. That was the instigator to start that portfolio on that trigger date, wasn't it? Tax loss selling.
Yeah, I think I saw the Copper report do it about 5 or 6 years ago. Sort of talk about the worst 20 stocks for the year, and then what they did the next sort of month or a few weeks and stuff there. So I thought, okay, well, 1 year I went through the bottom 20. So looked at the worst performing sort of 20 stocks out of the 300. And then looked at technically which 10 I thought looked the best chance of recovering, and then put them in a portfolio and saw how they went. And I think 8 out of the 10 did really well. I think 1 was pretty flat, and then 1 was sort of down a little bit. It's like, geez, that's actually worked pretty well. So yeah, definitely sort of something to have a look at. But yeah, it's probably more of a short-term phenomenon rather than anything.
It was an exciting 4 to 6 weeks in the first couple of weeks of the financial year. That was just amazing to see that corner turn. The dogs, as you were saying, come up top. It's quite a dynamics change.
Yeah, that's right. That's right. So it's the way to come there. Appen was on the list number 22 there. It's had a bit of a pop off the lows there. Obviously, percentage times there. Look, probably on the back of that Nvidia. If anyone's, if you haven't been reading about Nvidia, you probably haven't been reading about trading. It's had,
20% after in the day kind of thing, which is more than the market capitalization of 470 companies on the S&P 500.
Yeah,
increase there.
It's all this stock here. I mean, that's had a cracking run there. So what was that? 108 in October. So we're 39. So
there's a cup and handle in there, isn't there? Look at that. Kind of a cup and handle and the cup and handle.
Yeah, there's some tightening there. I guess the main thing there is you just didn't see, nice tight little, all small corrections all the way through there. Big volume through that drive there as well. But yeah, just come back here and add all that move here. Looks a little exhaustive there, but market cap's getting up there. But yeah, just that's sort of all around the AI sort of stuff there, and a bit of an upward move in guidance as well. So just all around that artificial intelligence, which everyone thinks is a bit of a game changer. So whether it is or not, it has been pretty good for the stocks. I think Appen's actually done a deal with Nvidia actually a couple of weeks ago. So quite good for them. But again, it's still a bit of hearsay rather than actual reality there. But don't let the good story get in the way of share price performance, as they say. But this one's had a bit of a pop here. So look, it's the only thing I do like about this one, it did wash out to a new low. So did come back a few times here. I sort of traded this a couple of times there, sort of did okay one time, got caught the second time, did okay the third time. So it's been a bit of a win-loss win for me, but it's definitely tricky. Definitely might have been easier to trade other things and use my mental energy elsewhere, but it's definitely moved around. But I kept thinking this one would have a big one, but in the meanwhile, it's reported pretty poorly. So it is shifting there, sort of new management team, new direction now, obviously a bit more of a focus on that AI, which is their sort of specialty, but it's going to take a little while there, but definitely one to keep an eye on here. CUV was interesting there. I noticed again that has come down to a new low and then bounced there. So volumes are okay there. So looked a bit exhaustive that day of the low. Got a little reversal the next day. And sort of been building there. So definitely sort of one to watch there, just because so many stocks came back and retesting the lows there. I was surprised this one wasn't actually in your list there, Chris, STX, because we had that in the list last week. I thought this one was pretty good, actually. I thought I love the way came back. Again, there's this classic thing here when you have these momentum stocks here, when they pull back and there's no volume coming in the sell there, that's when they can sort of go again. So I was lucky enough to sort of trade this one, being quite
Is
nice.
this one
to
we
me.
were talking about spacing, where it didn't quite come back and sit on the high, it spaced above the recent high?
Yeah. So we talk about, a normal trend will sort of sit on top of each other. A corrective trend, you basically come back come back below the previous high, come back,
Into the ranges.
Yeah. So when you come back in the range, so obviously this is coming back in the range, obviously, this is overlapping. So this is, throughout this whole period, it's still pretty weak here. That's the only thing, is the tightening. But when you sort of see it pull back and sit on top of the old high, so there's actually what we call it's almost like a channel, is what McLaren used to call as spacing. So basically you call it bullish spacing, because obviously we've come back to the old, we didn't come back and sit on top of the old high, we actually left space there. That's normally quite bullish, and normally that means you go to a new high when there's bullish spacing. So yeah, I did trade some of these. It's not the most liquid. So I think, got to be, I just traded small and already sort of traded in the strength there. I thought it might go to 51 here, but I did sort of take my profit early there. I just thought there's a good little setup there, but I don't want to be there long term. I thought TSK was actually one that we're in a while ago, Chris, as well. That did come up on the list because this was sort of big VCP in here. So the whole thing, impulsive move and volume, bit of an impulsive move there, a little tighten up here. There's that little David Ryan consolidation. So if normally it's under the high, this one's sort of slightly, but it's that tight consolidation, and then off it's gone here. So interesting stock, this one here, actually quite interesting stock. So that's a good setup there, isn't it? That's sort of your Davis box there, basically break into a new high there. Davis would be buying that, 41
Well,
cents.
dancing on a cruise ship.
Yeah, that's right. Just put his buy order and tell the broker to buy it at 41.42, and then with a stop probably maybe 5% under it, and that's way he goes. But it's not a bad looking chart there, that one. So looks okay there. So that's probably about it, actually. I think covered all the stocks there, but hopefully a few lessons there, sort of what to do, what not to do. I guess overall not a bad week for me. Probably just had a big chance to move the needle a bit yesterday. So a little disappointing in that regard, but that happens. That's trading. We just got to move on. The good thing is we identified it. We tried to put the order on. We just sort of, it's really sometimes a matter of seconds between you and someone else and getting set, and whether you want to pay up or not. These are things that you got to keep them within your rules. So but yeah, just pretty interesting. So it's there's still plenty of opportunities out there. I know can be a bit of a tough zone there, but I'm sort of getting to that stage there now. I'm trying to reel in my positions, Chris. Sort of felt like I might have had too many posies on, and not being concentrated enough in the good ones. And when you get too many on, you get too many distractions as well. You sort of, I think if you maybe just sort of narrow your focus a bit more, watch them closely there. And some of those things have been slowly. I mean, MP1, I was in that trade for a couple of weeks there before I got going. So, it's taken a while to move it. So sometimes you're sitting in here sort of Groundhog Day, just sort of, I liked it sort of, the consolidation here, low volume there, and it's sort of all tightened up in here. So I thought looked quite good, but it's taken a while to sort of get going, then eventually pop here. I think 88 is sort of one that I've been sitting in a long time here. This is one of the slowest trades I've had. Up and down, up and down, up and down here. I mean, it keeps building higher lows, higher lows, higher lows. I'll just keep edging my stop higher, slightly higher each time. But it's been a slow mover. But it's in the right sector. It's still climbing here. At some point, it might accelerate and pop out of there, or otherwise it'll stop me out. So I've probably got my stop to break even here now. So for me, I'm in a zero position there. If I lose on this trade, I got nothing to lose. If it pops, then I've got everything to win. So I'll just let the market work the rest out. But yeah, that's all we got to do as traders. Just got to keep sort of, try and stay with those strongest themes as we're sort of highlighting here. Try and keep our risk reward parameters nice and tight. Yeah, there's probably getting plenty of losers out there at the moment, but the key there is to sort of still win big when you do get the big ones. So yeah, they'll definitely pay for the bigger those risk reward parameters can be, then the better. Then the more you make on those winners, and then that funds the next round of losers, which are just around the corner.
That's a good summary of a fair few professional traders there, their insights, and how you've boiled it all in together for your own trading. So I think we'll say thank you very much for the insights, Gary Glover from Novus Capital.
Thanks, Chris.
Gary's mentioned a fair few things there, let alone his own Tuesday report, his tax loss selling trades, and this week's best trade, or possibly missed trade. We'll put a link there on the right-hand side, as well as the strategies. We go into a bit more detail on a playlist there going into those types of trades. And then on the left, there's Gary's Twitter handle, where he's somewhat active with the trades that he's looking at, those that are being set up in the ASX, and good trading philosophy. Thank you very much, and we'll come back again next week.